Hello, everyone. Welcome to Global and Voice Empowerment Network. This afternoon, we have Julius with us, and our topic for today is investing. And so, we're going to share practical steps for young people to build wealth from scratch. Julius, thank you so much for joining us once again. We are going to have an engaging discussion about investing. And so, if it's your first time, to join us on Global One Voice Empowerment Network, I'll advise you that kindly subscribe and share this video with other people because we're gonna really share practical tips on how we can manage investing as young people. Thank you so much, Julius. This is really very nice. Do you have something to share with the viewers before we start the discussion this afternoon?
Yeah, thank you so much. Good afternoon once again from the US, and then good morning. No, still good evening from Uganda.
Yeah.
I'm glad to be here once more. My name is Julius Odida. As I did introduce in the first episode that we had, I am a lecturer at Makerere University Business School in the Finance Department, Faculty of Commerce. Thank you so much.
Yeah, thank you so much for joining us. You know that since our topic for today is investing, many young people, particularly those from low income backgrounds, often feel like investing is out of their reach due to a lack of disposable income. And also, this misconception always lead to missed opportunities for financial growth and stability. However, understanding that there are practical low costs ways to start investing is very, very important. So, Julius, what do you think about this question? So, how can the young people, for young people basically who don't have much money to start with, what are some practical first steps they can take to begin investing and building wealth?
Oh yeah, thank you so much. First of all, before going into answering that interesting question, it is good that we understand from scratch what we mean by number one, to invest, or what we call investment, and then investing, because those are two important things that if we get to understand them, we shall have a clear understanding of each of those. So when we talk about investing, we are talking about you deploying your capital towards projects or activities that expect to generate some positive financial return over time. Okay.
Yeah.
So here we're saying probably you could have gotten your money, as we shall be able to explore, where you can be able to get your money and so on. After getting your money, then you need to invest. So the process of you putting that money into a project or an activity to generate for you income or a return over time is what we call investing. So after you putting money or investing this money, that investment you've made, that money that you put and the asset that you've actually put your money in becomes an investment. So investment is basically an asset or an item that is acquired with the goal of generating income or appreciation over time. So that's what we understand when we differentiate the two. So answering your question of young people who do not have basically the funds, or they have very little resources, what can they be able to, in order to do what? To actually be able to invest, okay?
Yeah.
So I want to explore something small of how we can be able to invest as young people and, be able to succeed. So if you are planning to invest, then you should be able to you should be able to understand a few steps, and these steps I'm going to share with you briefly as per my screen, as you can be able to see. So number one, as a young person, you should be able to start by first of all earning money, okay? Because I want to assure you, if you do not have money, then you're not going to do anything as a
you can't invest. Yeah.
So first of all, earn money, and you can be able to earn money in two ways. The first one, you can do what you call earned income. This is whereby you get into a job and work for a monthly or weekly pay or a fortnight pay, etc. Okay, and you generate money. Alternatively, you could have an investment. Maybe your parents have had investments, etc.
Yeah.
Then you go ahead and get money from that. So the first most important step for us to follow, or for every young individual out there to follow, is to first start by making the money. Okay.
Yeah.
For that, you need to first of all set up goals and development plans. What are you planning to save that money for, first of all?
Yeah.
Because you might save and save and save and save, and you don't know why you're saving. Okay.
Yeah.
Then at the end of the day, you end up misusing your savings. So define your goals. Define why you're saving. Are you saving to start up a real estate business? That is real estate investment. Do you want to buy shares, as we shall be able to explore? Do you want to probably buy bonds? Are you interested in dealing into aspects to do with farming, etc. Okay. So set goals for why you're saving. Then after setting goals, then go ahead and save. Okay. So you should be able to save. And how do you save? You track your expenses. We talked about that on personal finance. Okay.
Yeah.
You should be able to cut unnecessary expenses. And then you should set a saving goal. This by automating your savings and looking at accounts that will provide you with better interests. All these steps we are following is to provide you with a final stage of you having to set up an investment as someone who does not have. Okay. So after that, after saving money and you have made some savings, okay, then you can invest. And as you're investing, make sure you pay attention to the aspect of diversification. We say you shouldn't put your eggs in one basket. Okay. I give an example. We had for those who invested in two sectors that were affected by COVID-19 and did not diversify, that means they lost it all. Okay.
Yeah.
So it is better to diversify your portfolio. As we can see, when you are investing, for example, say in stock, okay, it is not good to only invest in one sector of the economy. Say, for example, banking, or you put all your investments into banking. You say, okay, I'm going to buy shares in the Standard Bank, or maybe the Bank of America, or the Australian Bank, the Development Bank, etc. So you should be able to diversify and say, okay, let me buy some shares in the banking industry. I go into the real estate industry and buy some shares. Then I probably go into the aviation industry and also buy some shares here and there. So investing, you should consider to diversify your investment portfolios. And this will be able, when you're investing or diversifying, you should be able to understand the concept of risk and return. So which of these investments have a higher risk and which ones has a higher return? So we all know the principle of investment, or the principle of risk, is the higher the risk, the higher the return. Okay, and vice versa. Yes. So having invested, now you have an investment, okay, which is basically long-term in nature. Now the next thing you should do is to actually protect the asset that you've invested in. Yeah. Because you've put a huge amount of money there. So it is better you protect that asset. So how are you going to protect the asset? Insure, okay? Take up insurances. Say, for example, if you've bought, let's say, trucks that transport goods, insure against accident, okay? You have to that you set up, insure against fire, theft, etc. And you should be able to have what you call a contingency plan, that is planning for the unexpected, okay? So that's how you will be able to actually protect your asset or your investment that you've made. Then another aspect that you should that young people should pay attention to is the aspect of tax. Okay. So we need to understand how we're going to be able to minimize the impact of taxes. Okay. So when you delve into a deeper aspect of corporate finance, you realize that a corporation or a company that raises money or that raises funds through debt, okay? By debt, I mean bond, is likely going to have a tax shield advantage because the allowable deduction in this case is going to be less than when you use equity, that is probably not borrowed money, okay?
Yeah.
So it's always important to be able to, into your business or a venture, to invest into long-term assets, because in the long term, you're going to have somebody who is a consultant, who is a professional employed to be able to run your business in this case. So, for example, if you're from a transport or a leisure sector, you're a person who has studied an undergrad of probably transport and logistics, you've studied leisure and hospitality, probably leadership and governance, and you started up a company or a corporation in this case. It will be much better to employ a professional in the area of taxation and corporate finance to be able to manage your business in this case. Then lastly, it is also okay to manage debt and build your credit score, because one aspect that damages business reputation, even if you've invested and your investment is going on very well, if you are not able to manage your debt, because we said you can be able to raise funds through debt and equity. So if you've raised through debt, then that means you need to pay interest. Okay.
Yeah.
So if you're to pay interest, then you should be able to pay off the interest
plus your
exactly.
Yeah.
That will in turn improve what we call your credit score. Okay.
Yeah.
If you are business, internationally, we have the credit rating agencies, or what we call the rating agencies. We have, for example, Fitch, the Moody's. We have Standard and Poor, that is S&P. So those ones there, if you are going global in terms of your investment, or if you're going multinational, then they will have to rate your business before they can be able to allow you or to attract other investors to come and commit their funds to your business.
Yeah.
So practical skills that you should be able to follow if you are to be able to build wealth or to invest at an early age. But before I conclude on this particular question, allow me go briefly on where we can be able to invest, okay, as young people.
Yeah.
Because now I've taken you through the steps, but then where do you invest your money? Okay.
Yeah.
Buy stocks. By stocks, in simple terms, I mean shares. Another name for stocks is shares, okay? So you can be able to buy shares in companies. There are companies that are traded locally and internationally, okay, that would trade their shares locally and internationally. For example, we have stock exchanges where for Uganda, we have the Uganda Securities Exchange. I'll go to East Africa. We have the Nairobi Stock Exchange in Kenya. Then we have the Dar es Salaam Stock Exchange for Tanzania. Now, when I leave and get into globally, in London, we have the London Stock Exchange. In the States, we have the New York Stock Exchange. And then we have the Tokyo Stock Exchange in Japan, okay? Now, all these stock exchanges provide a platform whereby we can be able to invest or buy shares in companies that are listed. For example, when you get into the New York Stock Exchange, we have what we call the indices that are there, okay? We have what we call the NASDAQ that has about, as we shall be able to explore more as we move on, they have about 1,300 companies, okay?
Yes.
Then we have the Standard and Poor in the United States still. They have about 500 companies. Then when you go to Uganda, we have about 18 companies that are listed on the Uganda Securities Exchange. There are a couple listed on the London Stock Exchange. So all these provide a platform where you can be able to buy shares. So still the aspect of diversification comes in here. If you are going to buy shares from companies, then it is not good to buy shares or from the United States stock exchanges only. It is good to get from Uganda, then you can buy from the London Stock Exchange, from China, etc. Okay. Then you can Bonds are still long-term in nature. These are debt securities issued by government. The government can decide to raise funds from the public through issuing bonds that are long-term, and they provide attractive interests. Usually here, I regularly read the Bank of Uganda platforms. They usually invite invitations to tender for the bonds and treasury bills, etc.
Yeah.
Invest in mutual funds and exchange-traded funds. These are short-term in nature, and they can easily be liquidated within a period of 1 year. Then real estate, this is buildings basically. You're venturing into rentals, into apartments, etc. You can be able to invest there. Then retirement accounts. These are you invest for future retirements. If you want to say, okay, I'm retiring at the age of 60, I no longer want to work after that age, try to build in some retirement fund. So we have the Uganda Retirement Benefit Scheme. We have the United States Retirement Benefit Scheme, that is for retirees. And by the way, this is the money that World Bank and IMF uses to be able to lend to countries. That is the funny thing people don't know. So these are retired people who say, okay, let me now have my savings, and then I can be able to invest them later on and get my interest paid. Okay.
Yeah.
You can invest in what you call savings accounts and certificates of deposit, that is CDs. Lastly, I think it is avenues. Yeah.
Yeah, thank you so much for sharing with us those practical tips. They are really very important. Investing is very important for us, the young people. It doesn't matter how much money you have. You don't have to be a billionaire to start investing. And it's very simple. Just have a goal, because when you have a goal, you will know what you want to do with your money. If you're investing you want to save, or if you're investing for retirement, you want to go into real estate or anything, you just have a goal and everything will be fine. And also, like, access to traditional financial services and education can be limited in low-income regions. That is very, very true. So it makes it challenging for young people to learn about and engage in investing. However, the rapid advancement of digital platforms and mobile technology has created new opportunities for financial inclusion. So, Julius, how can young people in low-income regions leverage or use technology and digital platforms to access investment opportunities in financial education?
Okay, thank you so much. This is interesting. I love today's discussion because it touches a real aspect. Because I live in a developing country, that is Uganda.
Yeah.
But then when I do comparison to my colleagues or friends who are in the United States, in the UK, I feel there is that difference. So
there is a very big difference, basically.
Yeah, responding to the question of how can the young people, most probably most especially in the low developing countries, be able to use, okay, technology.
Yeah.
First of all, I must make it a fact that technology is the way to go these days. Okay.
Yeah, that's true.
And the financial sector or the investment sector is not spared either. We have to adopt in order to be able to be successful. Okay. So, first of all, the young generation, which are the future of tomorrow, can be able to leverage, or they can be able to use digital platforms to basically access financial services and investment in the following ways. First of all, we have what we call online financial education resources, okay? And this is available. What we are doing right now is actually an online financial education resource, okay?
Yeah, that's true.
So it's actually a free course that everybody can be able to go and access.
Yeah.
Okay? So we have academies or websites like the Khan Academy. I must say that Global One Voice Empowerment Network is also one of them. For
yeah.
There's Udemy and then Coursera, etc. These ones provide you platforms for you to study free financial education courses. Then we have YouTube channels, okay?
Yeah.
We have blogs and websites. In fact, I use Investopedia so much because they provide for you updated financial information on a regular basis. Okay. You can even be able to write your blogs and you put it there. We have mobile banking and fintech apps. We all know that mobile banking is the way to go. I must say, I don't know when I last stepped into the bank.
Yeah.
Yeah, but I use mobile banking. You get money from your account, transfer it to your money to your mobile phone, deposit it, send money, etc. Okay, we are now in a digital era. Okay, so you can be able to manage financing or and then invest via a phone. Okay, so if we talk about investment into stock exchanges, bonds, into real estate, all this can be done by simply buying these shares online. Okay, I give an example. Uganda here, MTN and Airtel were issued out an initial public offer, but you could be able to purchase their shares online. You didn't have to go to MTN offices to be able to buy shares. So we can be able to use mobile banking and fintech apps. For example, we can use these fintech apps. There are these different telecommunication companies that are coming up. We have Robinhood, we have Econs, and then Stash. All these can be able to help you learn and invest in a micro way. Okay.
Yeah.
Now, we have micro investing platforms. For example, we have Betterment, we have M1 Finance. All these are actually platforms that can help you do what you call micro investing. Micro investing, I mean investing in a small scale. You have your $10, you have $20, you can be able to invest. A
Yeah,
common
that's
example in Uganda, we can talk about Zeno. Okay,
true.
Zeno is actually an investment platform where you can be able and you see your investment or your interest growing per day, you can be able to put there these unit trust platforms that are there that you can be able to use for purposes of investment. We have community and peer learning where you can use social media. By the way, this is very true. Only
Yeah.
that as young people tend to use social media to, abuse, post pornographic articles, which are very unfortunate. But then
Yeah.
I want to task my fellow young people today, okay? Go on the different online platforms, the X, formerly Twitter, Instagram, LinkedIn, and follow aspects of finance and investment platforms. Number
Yeah.
one, follow IMF, follow World Bank, follow the Spectator Index, follow Global One Voice Empowerment Network. All this will be able to provide you with financial information and investment tactics. Okay.
Yeah.
Follow the stock exchange, follow the London Stock Exchange, follow Bloomberg, follow Nasdaq, follow S&P, etc. You will be able to learn how best you can be able to invest either in real estate, either in bonds, stocks, etc. So use these social media platforms because they provide updates on a daily basis so that you can be able to stay updated and you get to know how the trading or the investment world is working.
Yeah.
You can use social media for purposes of fun, which is also necessary, but you should be able to also benefit in the other way, in the other direction of investment.
Yeah.
It is better to go global because you're not going to rely on only, say, East Africa or Africa. It's better you get into the Middle East, you get into Europe, you get into the United States, and get to know how is the global market performing. I talked of the financial market, where you can be able to invest in bonds and equity, which you call them stocks. Here you can be able to access indices like the Nasdaq, which has about 3,700 companies listed there for investment.
Yeah.
All these are companies where you can be able to invest. We have the Dow Jones, which has about 30 companies. Then we have the S&P, which is Standard and Poor, which has about 500 companies for investment, where you can be able to bonds or stocks. Okay. You can also invest in cryptocurrency in the global market. Although when you come to Uganda, the government has said for us, we're not regulating this, so you invest at your own risk.
Yeah.
So when you're able to invest in this, I'm wondering if it is on in the US, if it's regulated, and you may have to find out. But this is also another alternative that is coming up. So you can invest in Coinbase and Binance, etc. All those are platforms on cryptocurrency where you can be able to invest. However, if you're investing in this, I want to make it clear that you should avoid too good to be true investment avenues. You know, there are some investment avenues that are too good to be true. Okay.
Yeah.
In Uganda here, we had something called Capital Chicken. They collected a lot of depositors' money, and then all of a sudden they freezed off their website and disappeared.
Yeah.
And it was very good and huge returns, okay, on investment. The examples of too good to be true investment avenues. So as you're going into cryptocurrency and digital platforms, you should be able to be careful and do proper due diligence, because all these can be risky. That's if you do not do, or if you don't invest in them properly. Yeah. So at least that is one aspect I need to make it clear as people are investing in that. Yeah. It is good to look for virtual mentorship and networking. You can connect with finance mentors through LinkedIn. Yeah. There's what you call 10,000 coffees. You can have webinars and then virtual finance events. These are available, okay?
Yeah.
That we can be able to utilize. Then there's government and non-profit organizational initiatives, okay? Now, the IMF, that is the International Monetary Fund, has what we call a financial literacy program. And this is tailored towards helping developing countries, of which Sub-Saharan Africa, Uganda inclusive. We can be able to benefit from the program. We only need to look for it. Then we have the World Bank Financial Literacy Program. We've just seen the World Bank Group Academy that has just been launched. Actually, I've been checking on their space today. That is on their X space. Yeah, they've just launched a program today. So this is to enable or to ensure that developing countries are able to access education or financial literacy education in areas of finance, climate, in areas to do with investment, which we're actually talking about today, and then issues to do with environment, and then governance issues. Okay. We have crowdfunding, which is actually going on, and then peer-to-peer lending platforms. Now, crowdfunding, you can go into GoFundMe. This the crowdfunding. By crowdfunding, I mean you're going to get funds globally. For example, I can be able to create a platform, okay, where I'm able to raise from my friends. So after creating, I link it to my bank account, or what we call a strip account, or any other account. Then people donate funds for the purpose or the cause for which I am fundraising for. This, at least I have an experience with it, because in my initiative, we raised about $800 by people simply donating to cater for a cause that we were actually fundraising for. So to get financing or access financing, if you have a huge network, you can't be able to actually go into crowdfunding. Then peer-to-peer lending, this can be able to give you loans for investments or businesses, basically on a smaller scale. Yeah. So these are the ways in which young people can be able to have financial inclusion. But then we can be able to leverage digital technology in the following ways and digital platforms. Number one, first of all, you need to understand, okay? We talked about business goals. What are your goals exactly? Because as we agreed, without a goal, you cannot be able to do anything, okay? So first of all, understand what you want. I must say, this is a very common challenge in Sub-Saharan Africa, because we do not have a goal.
Yeah, that's very true.
It simply says, I am setting up this, and when you go ahead to interrogate this person to get a deeper insight of why he or she is starting this, they can't actually explain to you why they are starting this. Okay, so please have a goal. Okay, if you are to go through the digital transformation and have what we call financial inclusion in the digital era, you need to have a goal. Okay, secondly, you need to do an audit. You audit what you call your operations to identify potential risks. Okay. Then it is better to benchmark. By benchmarking, I mean no man is an island. Okay. Go and look at how other people have done it. Then you can be able to say, okay, they have done it this way, and it is good to do some bit of reading, by the way. You can do both the practical bit of it by physical visit, etc. But it is also good to read. Because there is a saying that if you want to hide anything from an African, then simply write it down. But please, no? My dear young people watching and those who watch later on, break that barrier and do some bit of reading. So do some benchmark. Then it is good to plan, develop what we call a detailed strategic plan. What is your strategic plan in future? What do you, how do you foresee it? Okay. And then align it with what you have actually, with what you want to execute. So if I want to see this investment, or I want to see myself accessing 1 million customers or being able to access this amount of money in future, then what are these steps that I'm going to follow in order to be able to access all these funds? Because you go through a step, then you'll be able to achieve what you want. Then it is better to get into the management. Now, management is very important. That is managing. So, as I actually did mention earlier on, you might not do everything yourself. Okay, you can simply be the CEO, but it is better to actually hire someone who is specialized. Okay, to manage for you certain aspects that you do not know. So if you started up a small investment, it is actually better to hire somebody who is going to manage your finances, somebody who is going to manage your taxes, somebody who is going to manage your technology, your social business, etc. Okay? So the aspect of management is actually very important. Then lastly, it is good to actually provide regular report on business intelligence, on how basically you're performing. So this is the aspect of you going global, reporting the activities that you're doing, because nobody is going to know that you're prospering if you are not going to make it known to the world out there. Okay? Make yourself available in the social media. Okay? Use your social handles, your business social handles, etc. Because it is through your social media handles or through your exposure out there that you're going to get opportunities as a young person. So ensure that you are available and let people know whatever you're doing, because that will be for your own benefit, and it will let people know that you are somebody who is succeeding out there. Thank you.
Yeah, thank you so much. Like, I just want to add and say that, like, before you do this, before you invest in anything, understand what you're doing. Like Julius has just said, it's very important, because if you don't understand what you're doing, then you may end up not succeeding. And you must have a goal. I still repeat that, like, having a goal is very important. And the other thing is that, like, before you do something, before you invest in any organization or any company, first look at their business profile, look at their success stories, and read about their history. How long have they been operating in? How is their success? You know, don't just invest in any company, because then you may end up losing everything. And so I want to add and say that, like, investing is often surrounded by myth and misconceptions, particularly among those who have limited financial knowledge or come from poor backgrounds or very humble backgrounds. And this myth creates a significant psychological barrier, preventing young people from taking the steps towards investing. And the common myths include the belief that investing requires a lot of money, it is too risky, or is only for financial experts. And like by debunking this myth and providing clear, factual information, young people can be empowered to take control of their financial futures. So, like overcoming these misconceptions is very, very essential for broadening participation in investments and fostering economic mobility. So, Julius, what are some common myths about investing that often prevent young people, especially from humble backgrounds, from getting started, and how can they overcome these misconceptions?
Wow. Yeah, this is actually a very, very interesting area to talk about as well.
Yeah,
There are so many myths and beliefs and everything to do with investment. And this really bothers people a lot, you know. So I want
yeah,
us to explore them. Let's look at a myth, then the reality of it, and then how can we
yeah,
overcome it, okay? First of
yes,
all, the first myth that that you hear people talk about is investing is only for the wealthy, only those who are
yeah,
rich. Yeah,
yeah, yeah,
and it is actually worse in sub-Saharan Africa because they assume once you've invested, then you're rich already. Yeah,
yeah, that's true.
that's the case. Okay. The reality is many platforms allow small investments. I don't
Mm-hmm.
need to have a huge amount of money, say millions and millions of Uganda shillings, or thousands and thousands or hundreds of dollars to be able to invest.
Yeah,
As I made mention earlier on, there are platforms or the unit trust fund platforms or mutual fund platforms that you can begin investing with as low as 10,000 shillings.
yes,
Okay.
that's true.
There are platforms that you like, you can open up a treasury bill account in any financial institution with as low as 100,000 shillings, and you open up a treasury bill account. So you don't need a lot of money to be able to invest. So the best you can do is to start with micro investing platforms and then fractional shares to be able to have your investments moving on. Then secondly, we have another myth that is investing is too risky. But I want to tell you that not all investments are risky. Okay, not all investments are equally risky.
Yeah, that's
Um,
right.
there are investments that are risky, that are others that are actually risk-free. Okay. For example, let me start with investments that are risk-free. For example, if you buy bonds, these government bonds, they are totally risk-free. This I can assure all of you. Okay. Treasury bills are risk-free. But then you realize that investments that are risk-free often offer a low level of what? Of return, or they give you a low return on investment in this case. But then, given the fact that we cannot run away from risk, okay, there is what you call diversification, where you don't put all your eggs in one basket.
Yeah,
So if I am investing, say for example, I have say $100,000, then it is advisable that I don't invest that entire $100,000 in one investment avenue. Say, for example,
yeah,
I cannot say, let me pick all the $100,000 and I invest it into real estate. Probably, let me say I pick $50,000 and put it into real estate, pick another $25,000 and put it probably into shares or buy shares, pick another the remaining $25,000, and then I put it maybe into buying of maybe say treasury bills. Okay, so with that
yes.
I would have diversified. Now let me go into the local way, such that our local people in sub-Saharan Africa can understand. I have
Yeah,
100 million shillings. Okay, so 100 million shillings, Uganda shillings, for example, I can decide to say, let me pick 50 million shillings and I build rentals. That is real estate. Okay.
yeah,
Build probably 5 good rentals. Then I pick 25 million shillings. I invest it into transport. I probably buy a taxi for myself that will transport
yeah,
people from one district to another. Then the remaining 25 million shillings, I can take it into agriculture and I begin doing what? Farming. Okay. So
yes.
by that, I would have diversified such that in case I lose from agriculture because of bad weather, then I will get from the taxi business.
Yes, that's very true.
Or I will get from the real estate or the rentals that I have built. So that's what we call
Yeah.
diversity. So not every business is too risky as we're talking about. You have to diversify, and then you can also be able to put your money into assets that are, or investments that are totally risk-free. Like, for example, you can invest in bonds or you invest in treasury bills. Those ones are totally risk-free in this case.
Yeah.
So you need to educate yourself on risk management and start with low risk options, like, for example, index funds. So first of all, you need to know these things, because if you do not know them, then you're not going to understand. You need
Yeah.
to know the diversification. Then you need to be an expert in order to invest. No, you don't need to be an expert in order to invest.
Yeah.
So the reality is, basic investment knowledge is actually widely accessible. Okay, we are sharing it right now. You don't need to be an expert in investment to be able to invest. So you can have basic knowledge by simply watching YouTube videos, reading, going on platforms, coming to Global One Voice Empowerment Network and seeing the different investment alternatives that you can be able to invest that we are discussing today, and then learning it. Then you'll be able to understand. So you can be able to use free resources like YouTube channels for financial education, Khan Academy, Coursera, etc. So you don't need to have gone to a university and studied, become an expert. You have a bachelor's degree, a master's degree, then you invest. No, please. No. Then you need a lot of time. Not really. That's also a myth. You can have what you call investment, whereby in fact, there is what you call passive investment, where I can decide to say, get my money, take it into a unit trust, and see the money grow.
Yeah.
The money will grow in for you. Or you start up a business and put someone there to sell for you or to run the business for you. You simply do the oversight role of it. So you don't require time in all investments. So you can use what you call robo advisors like Betterment to be able to do your business routines in this case. So another myth could be it's too late to start investing. No, it's never too late to start investing. You can start in any time, okay? It's never too late. You can start up a long-term investment now, okay? So it is better to start investing as soon as possible to be able to benefit from investing. Okay, I'll continue to other myths. There are really so many myths that we need to explore. Another one is you need to pay high fees, okay, on investments. So this is not true. There are many platforms that offer low or no fees, okay?
Yeah.
It's better to choose actually low cost or commission-free investments. You do not have to pay a lot of fees to be able to invest in this case.
Yeah.
Another myth is investing is like gambling. This is actually laughable. Investing is what we call informed decisions and risk management, unlike gambling. Because with gambling, I give an example. You say, okay, Man U is playing Arsenal. I bet that Man U will beat Arsenal. But this is something that you do not know, okay?
Yeah.
But investing, I know that, okay, I have 10 million shillings, okay? 10 million shillings, I am going to put this, if I invest the 10 million shillings into real estate and I build my 3-roomed house, each month they are going to rent it and pay me probably 100,000 shillings per month. So if they are 3-roomed, I'm going to get 300,000 shillings. So you by the time you go into investing into rentals or real estate, you already know how much you're going to earn. Okay. If I am starting up a business, say a retail shop somewhere, then I know that, okay, this is the amount of money I'm going to spend in buying stock. I'm going to sell and make a profit of this. So it's not at all like gambling, okay? So That is actually a very big myth that I want us to rub it totally off our minds and get on and invest. Okay? Then others say invest too complicated. Basic investment principles are actually straightforward. That's not true. So we're supposed to start with basic investment in stocks, bonds, mutual funds, and user-friendly platforms. By the way, these investment platforms are so user-friendly in that they even provide for you a tutorial of how you create your account, how you go about to link your bank account to the investment account, and then how the payments are going to be made, how you should be able to make the investment, and you can be able to track how you are actually performing in this case. So this is not complicated at all. So you should be able to explore that and start with the simple ones as a young person. And I've told you start with as low as 10,000 Uganda shillings. That's about $3. No, $2.
Yeah, about $3. Yeah, about $2.
$2, yeah. So that's not quite expensive. You can be able to start that, yeah, and grow and keep growing. Okay. Others say I can't afford to lose money. Okay. But then you can decide to choose a low risk investment.
Yeah.
Okay. Invest your surplus funds. There are some investments that have a very low risk and others that totally have no risk at all. But the principle says the higher the risk, the higher the return. Okay.
Yes, so that's right.
If you fear the high risk investments, go for low risk investments, but expect a lower return in this case. Because the principle, the higher the risk, the higher the return, and vice versa. But then it is better to also build what you call an emergency fund first. Then you invest in what you call low risk investment. We talked about an emergency fund, okay? Something that will be as a buffer or cover up in case you make a loss. So it is better to go in that direction, have an emergency fund. Then after having the emergency fund, then you can be able to go into the low risk investments and carry out your investment in this case.
Yeah.
Then you need to follow the stock markets daily, okay? And this comes, first of all, out of love. You need to investment is all about loving the sector you're going to invest in. If I am going into the financial sector, then I need to follow the stock markets on a daily basis. If it is real estate, follow the real estate sector on a daily basis to see. If you're investing into transport, you should be knowing what is in the transport industry on a daily basis. If you're into aviation, you should know what is in aviation on a daily basis. You're into retail business.
Yes.
You're in produce business. You need to know what is happening in that industry on a daily basis. Okay? Because if you do not follow that on a daily basis, then you're going to have challenges.
Yeah.
Because you cannot convince anybody that you're into that business if you do not know what happens in that business. Okay.
Yes.
I have some of my friends who are into foreign exchange trading. Okay. They have notification bars on their social media platforms, on their emails. They've subscribed to the email alerts on a daily basis. Whenever they see the alerts on their phones, they rush to see, because that is their area of interest and that is where they have invested. If you have invested in the education sector, okay, you probably have a school, then you should be able to know what is the curriculum development, what are the new trends in the education sector on a daily basis.
Okay? Yeah.
Me, who is in an academia, who is in the academia, I have to read and understand what is in the financial industry, what is in the economics. I need to understand on a daily basis, keep informed. Okay, so to keep on track with the stock market on a daily basis, because this will give you an update of what is happening, and this information is available that you can be able to actually track. Okay. Lastly, additional tips. Let me give some additional tips. It is better to always seek what you call support. Okay. So by seeking support, I mean you can engage with online investment communities for advice and support. There are these communities that are there that you can be able to join. Okay. Then it is better to have what we call mentorship. Okay?
Yes.
You have mentors, you connect with mentors or financial advisors for guidance. Okay. It is better to always have somebody whom you look up to, or somebody you can be able to ask for any form of advice from. Because if you do not have somebody you bench on, then you're going to have a challenge as a young person. Okay. So as a young person, have somebody who inspires you, have somebody whom you bank on, you can be able to consult for expert advice in that case.
Yeah.
I'm very happy when I find my fellow students I studied with, they want to write business plans. They say, okay, please, can you help me write this business plan? They want to write proposals. They send back to me and say, can you help me write these proposals? So
yes,
I ask, they want to invest. They say, okay, please, Julius, I have this amount of money. What investment can I be able to make? Then I say, okay, first of all, where do you want to invest? Then they say, okay, in this place. So you need to have somebody whom you are going to rely on for purposes of getting knowledge, and this person can be called your mentor. Then, most importantly, is to stay informed. Okay?
Yeah.
Stay informed, regularly read financial news. Okay? I believe on televisions you have business news. Okay? Please stay informed. Watch the business news. Have subscribed to Financial Times news, to financial platforms, say Facebook, say WhatsApp platforms, WhatsApp groups. You can read blogs, you can read books, and stay updated. Because it is through staying updated that's when you're going to get the information.
Yeah.
When you are updated, then you're not going to get the information, and you are going to have challenges. So it is very important to always stay informed and stay updated. Yeah, thank you.
Yeah, that's very true. Thank you so much. This has been a very wonderful discussion about investment. And I just want to add and say that, like, when you're doing something, be passionate about it. Like Julius was saying, you should love what you're doing, because that's when you'll be looking for more information. Like, be passionate about it and start small. So I want to conclude this discussion by urging all the young people out there, whoever is listening to us right now, especially like if you feel like you don't have much money to start with, always remember that building wealth is possible for you too, just like any other person in the world. Begin with small steps like saving little from each paycheck or from any money that you receive monthly, like when you're budgeting, like budget also like wisely, and exploring apps, just like what you just was saying, that will let you invest even small amounts, because you can easily invest very, very small amounts. And in areas with fewer financial resources, technology is your best friend. Use your smartphone and internet to access financial education and find investment opportunities that fit your budget, basically. Don't let common myths hold you back. You don't need a lot of money to start investing. It's not too risky as you might think. If you diversify, basically, it's not very risky, and you don't have to be a financial expert. With the right information and tools, you can begin with your journey toward financial independence, and believe that it's like you have the ability to learn and grow and take these first steps towards a brighter financial future. You have the power to change your financial story starting today. Don't worry, you can make it. Thank you so much, Julius, for having this discussion, and we are going to have another discussion in 2 weeks' time. Thank you guys for listening.
All right. Thank you.